All right, traders, welcome to the midweek market review. We're going to go through what we have going on and also what we have planned for today, right? So let's start by looking at the DXY. You know, the DXY is the US dollar currency index. We are still very much bearish on the US dollar, and we are monitoring the US dollar price relations with the DXY, right? If the DXY breaks with this, let's call it midterm bearish structure, and if it trades and holds above 90.40, 90.40 to 90.45, right about this high, we are going to switch to midterm buys on the US dollar. For the time being, we remain bearish, and we are looking for sales on the US dollar. As you already know, let's look at the forward chart. And well, the forward chart, you can see that we had that fake out of the midterm structure. This was a very structured bearish move. It is still, right? And right now we are trading outside of that structure. So this structure is no longer in play. But we have a short-term structure that it is currently in play. I'll show you what structure that is in a second. Right? This one right here, right? So we are still inside of a bear structure, and like I said before, if price breaks below, or I'm sorry, above that 90.45 to 90.50 level, we should be looking for buys. But right now, what we are doing is just selling those rallies on the US dollar, and more so because we are still inside of this, let's call it short-term structure, and we are trading below the 90.25 level, right? So this is, let's call it the big short-term make it or break it level, but still, if price breaks above it, we will still look for sales around the 90.45 to 90.50 level, right? Fundamentally speaking, we continue to be super bearish on the US dollar, and our focus really is the next Fed meeting to see if the Fed hikes interest rates to fight that rising inflation, right? If that happens, that is going to make for a bullish pressure on the US dollar, and we will change our bias to a buy on the US dollar, at least for the short to mid-term, right? Let's talk about gold and silver. On the daily, right? On the daily, gold looks extremely bearish, right? If you are new to the VIP team, you might not know this, but also, all clients already know that we were looking at this massive base for some rejection, the 1910 level, which we've had, but because of rising inflation and US dollar depreciation, we continue to be bullish on gold and silver, right? Why? Because when inflation rises, risk is off, and that means that money moves from riskier investments such as equities to safe havens or less riskier investments as gold and silver. On the daily, just looking at technicals, this looks extremely bearish, right? That candle, this daily candle, today's candle looks super bearish, but we are going to keep on with our bullish bias. Why? Because if you look at the 4-hour chart, right? If we look at the 4-hour chart, yes, we have, price broke with the midterm bullish structure, but we are still above the 1890 to 1891, the exact level that was rejected on Friday, right? If you remember, I was talking about why we didn't buy gold on the break of that bullish flag, and it was because it was late on a Friday. Now, the make it or break it level for me, right, is that level, the 1890 level. Why? Because if price breaks with these highs, we are going to keep on, we are going to look for sales, right? Why? Because if you look at the structure, right, historic price action gives you clues. The last time that gold was being capped to the upside by a level, when it broke, it moved. I mean, I can show you. Let's calculate it, right? From the breakout to the highs of the move, we saw a 5% move to the upside. And also we can see it right here on a flat triangle. This move was a little less strong, but still we're looking at a 2.6% move to the upside. So unless gold fails to hold the previous broken highs, we continue to look for longs, okay? Well, current price action in gold, let's go to the hourly, right? Let's go to the hourly chart. And yeah, this is the hourly chart. Let me just delete this. So the hourly chart, I'm just looking at levels, and as you can see, we have those highs. We are trading below the weekly pivot, of course, but that really doesn't tell me too much. What I'm looking at here on the hourly is the last 7 days of price action. It is super rangy. We are not making higher highs or higher lows. I mean, gold printed higher highs, but still failed to print higher lows, which means that we have a non-directional trade in our hands, right? If a gold holds these previous highs, which is going to be our buy level again. I know that we had that buy stop right here that got stopped out, which is fine, right? Now, we're not going to win every single trade, but what we're going to do is we are going to look for another opportunity to buy gold should we retest this level, the 1890, and if I see a rejection like we saw on Friday, we are going to enter long. Silver, it's basically the same. Currently, I am still holding that silver long. Let me show you. Where is silver? Right here. I'm still holding that silver long, right? I haven't taken any profits on it because I'm waiting for the possibility of that multi-year breakout. If that multi-year breakout plays out, we could see silver really rally towards the $30 per ounce. For all of you that are new to the VIP channel, I'm going to show you what I'm talking about. Let's go to the 2-week chart. Actually, yeah, the 2-week chart is it's perfectly all right. So the multi-year breakout that I'm looking at is this one right here. Okay, so we have been in kind of a very structure since May 2011. And well, let's position this this trend line like you all do, right? From the highs at around $49.35 per ounce on December 29, 2009, and to the highs on when was this? To the highs on July 2020. Right. So if we look at what's going on right here, price action, we had that very strong rejection candle. This is the 2-week chart. On the monthly, you can see an even hotter rejection, a very bearish monthly candle right here. But if you look at what's going on with the lows, even though we've seen rejections of this level from the 2830 to the 3020 level, buyers are coming in higher and higher every time this level gets rejected, which means that this is creating a flat triangle, right? Which is a continuation structure, technically speaking. But if you look at what's going on, and I'm going to show you the monthly again. If we look at this base right here on the monthly, this massive base, and this is the candle that I was talking about, right? If you look at the last monthly candle, it closed above that base, right? So this tells us that price has stabilized above this previous base. Now it's turned into support. That's why I'm still holding that or those longs in silver, waiting for that breakout and not being afraid of the massive swings on open profits, right? So that's something that it's not for everybody, right? But that's what swing trading is all about. Now let's talk about the Eur USD and majors. We were holding a actually we took that long on the Euro US dollar. We took TP1 were hit, TP2 actually TP2 were hit. Actually TP2 were not hit, but we closed the position right on the highs. And the reason that we closed the positions right on the highs is because I saw that there was no momentum, or there was not enough bullish momentum to break with these highs, right? And also because we held the second part of our position through all of this choppy price action. Now, I'm still bullish on the Euro US dollar because I'm still very bearish on the USD. Right now, there might be an opportunity to buy the Euro US dollar, but we already have a short on the USD, on the GBP USD, right? It's much clearer, but let me show you the 4-hour chart. The 4-hour chart on the Euro USD is super bullish and has been since the beginning of May, the end of March of this year. This is a super structured bullish market, and really the opportunity to buy the Euro USD like we did was right there. Okay, now let me show you the GBP USD, and right, so this is not the signal that we sent you guys, of course. The GBP USD, right? So the GBP USD again, it's the same story. Okay, it's the same story. The upside is being capped by the 142.50 level, and shorts, short sellers or short traders are being caught in a bull trap. Why? Because it's again creating a flat triangle. Buyers are jumping in higher and higher and higher every time price gets rejected, or every time this level gets rejected, right? So eventually buyers are going to be strong enough to swipe with all the sell orders that are placed there. That's why we have that buy on the GBP USD, and let's see how that buy is really going. Hold on. GBP USD. Well, let me show. Let me change accounts right here. Well, actually, we have the long that we have is on the GBP yen. The GBP, it's about to hit profit. It's about to hit target. That's awesome. The GBP USD long position that we have, it's on the swing trading group. If you want that, just email support, or there's a link below this video. Now let's have a look at some equities, but first let's have a look at cryptos, right? And you know, my favorite crypto right now, and I am long Ethereum actually. Well, my favorite long in cryptos is Ethereum. It has been really hard to get long. Well, it hasn't been hard to get long in Ethereum. What has been hard is holding on to those longs. Why? Because, well, I got long here at the bottom of the move, and I added somewhere here, right? And my positions in Ethereum are long term, so I'm not going to be taking profits anytime soon. But you know, this very structure held. But when it broke to the upside, this is where I bought, and again I bought today. Again, I bought today on the break of today's highs. The reason that I'm telling you this is because what we are going to do. Just let me show you that Ethereum position, right? So you have an idea of what I'm talking about. Cool. So this is my Ethereum position. Okay. Right now I am keeping a real close eye to that 2900 level, right? Why? Because that is the level that to me is the make it or break it level for bulls, right? If bulls are strong enough right now to break with the 2900 level, the previous week's highs, it's very plausible that momentum is going to hit this market, and we're going to see price rally at least to retest these lows around the 3280 level. So what we're going to do is we are going to wait and see if we break and hold the 2900 level, and here is where we're going to look for buys, and I'll keep you posted on those buys on the VIP group, right? There's a possibility that the breakout is going to be very strong if buyers are strong enough that we might not get that retest. But if we do, we are going to get on a nice risk to reward buy in Ethereum. Now, kudos to everybody that is long with me, and let's finish up this midweek market review with some equities, right? So let's start with the FTSE. The FTSE on the daily, is retesting a previous base, a pre-pandemic base, which is a very strong level. Now, I was looking for maybe some sell opportunities, but I really didn't see the setup really clear. But what I'm looking at is the possibility on the hourly. If you look at the hourly, we are clearly retesting a previous broken highs. So we might get an opportunity to buy into this weakness, but right now, we're not going to buy blindly, in the sense that we're not going to buy without having a proper risk to reward in our plan. What we are looking for is really a retest and a clear rejection, which means that I'm looking for a low to print, right? A rejection, and then we might get a really nice risk to reward to first targets, which should be this week's highs. And then if we go to the higher time frames, we might swing this position for a break of the 71.50 to 71.70 level, right? Let's see, and let's have a look at some US equities. We are still looking for some decent buys, buy opportunities in the Dow and in the Nasdaq. So the Dow, well, the daily really is not going to tell you much, but let's have a look at the 4-hour chart. The 4-hour chart, it's I mean, it's not the prettiest chart that I've seen, but we are retesting these previous highs. Let me just change the color on this. I don't know why it's red. I hate that. And we are retesting these previous highs, these previous broken highs again. Pretty basic breakout retest trade, which confluences with the weekly pivot, and also with the bullish structure, right? Having printed somewhat of a bullish divergence, but right now price is looking, or price action, I'm sorry, is looking very bearish, and with the strength that I'm seeing on the downside, it's very plausible that we are going to get either a fake out or a real breakout. So we're going to wait for at least pre-market, pre-US market action, you know, or pre-US market trade to see if we can get on a buy. Now the S&P 500, same story. We are retesting the previous broken highs, but the risk to reward on the Dow is much better. The Nasdaq is a different story. The Nasdaq still trapped inside of this range, right? Now, and this is what I like about the Nasdaq. This is the forward chart. So we saw price action trapped inside of this range from last 25th. Let's have a look. 25th. So from last Tuesday, right? This is clearly a no trade zone. This range is clearly a no trade zone. But because these lows are clearly where buyers are jumping in, we might get a very good buy opportunity if we see a clear rejection of the lows. And for that to happen, I mean, we have to go to the lower time frames, and the hourly. Actually, we have to go lower than the hourly, which I don't do very often. But if we look at the 50-minute chart, right? Let's go ahead and let's look into the past rejections of that 13,600 level. Cool. So every time sellers move dip price to that level, we see these big bullish candles, right? This means that, of course, buyers are jumping in here. The last time that price came to this level, we had a 50-minute bullish engulfing candle. Now, this is, to me, not a trigger to go long, but because we are trading in such a narrow range and the low of the range is so filled with buy orders, that I'm keeping a close eye to price hitting that level to get on a buy position on the very low time frames, because we are trading on a range, right? And the reason that I'm looking at the 15-minute chart is because of the range that I showed you on the 4-hour chart, right? I'm not going to get, I'm really not going to buy into weakness on an hourly setup, because if I do, my buy would be not even this low, maybe around this level. So my risk to reward ratio to the first target, which should be the highs of the range, is going to be off. So if we get a rejection on the 50-minute chart, right, like we did the last time that we hit those levels, which are Thursday's lows, we might get on, we might get a very nice risk to reward ratio for at least TP1, and we might hold that position for a possible break above the previous week's highs. So we might be looking at a buy for around a better than 1 to 2 risk to reward ratio to the 1375, the 780 or so, and then maybe holding on to that position for a breakout. If that plays out, we might be looking at a possible 4R on that trade. Now the daily chart on the Nasdaq is looking extremely bearish, right? The rejection of these previous lows, which were already retested as a resistance, and this is the level that sellers jumped in to move price down from high to low. We're looking at about a 6.68% move is where we're seeing that that bearish pressure. Again, if price breaks with these lows around the 13,597, again, we are looking at a CFD chart. If you trade futures, you might look at the NQ chart, but you know, and the prices might differ from broker to broker when it comes to CFDs. But just look at the highs and the lows that I'm pointing out. For the time being, the positions that we have on are enough for what we are looking on, or what we are seeing on the markets, more so on the US dollar and on the pound, right? Again, right now we are seeing, just have a look at this, right? The gold chart. Let's finish up by looking at this gold chart. Again, buyers jumping in at the lows or the previous broken highs. You know, let me just delete this structure because it's no longer in play. But if we look at the hourly, there's actually no setup to go long. And the reason there's no setup, even with this massive bullish hourly candle, I wouldn't go long right now. Why? Because we printed a lower low. Okay. We might get an opportunity to go long above the 1898 level, but I'll keep you guys posted. Because if price continues to dip, we might get an even better risk to reward ratio on our long gold, right? So if you have any questions about anything, you know, just email support. I'll respond to any query, and yeah, I mean, right now Ethereum is really rallying. Okay, cool. Thank you, and I'll see you around, guys.